stock market weekly chart review for the week of January 9th through January 13th, 2023, officially ending the second trading week of the year. From what I've been told, 78% of the time, the 11 months following January tend to mimic January. And apparently this has been true for 100 years of trading data. So what one of my mentors told me is that that someone somewhere, some team of people, I don't know, he didn't really clarify that, but apparently there was a study done looking at 100 years of stock market data, and 78% of the time, whatever happens in January tends to happen, tends to follow that. So for example, January of 2022 was a down month, and the rest of the year ended up playing out to be very bearish. So we're looking to see what's going to happen. If you've been watching these videos before, I think a very likely scenario could be a sideways market. We will see. You know, that means a low probability of the markets trading differently than January, but there's still a probability, 22% probability. So we will definitely see. Now, normally what I've been doing in the past is, been taking a quick look through these various like general markets, then the different sectors of the market, sometimes the futures, in this sort of view to try to cover a lot of area really fast. And it is good for that, right? We're able to quickly, maybe because I talk too long, not quickly, but if I'm just here by myself, I'm able to quickly get an idea of what's going on. I'm looking at 12 different segments of various markets, in a quick snapshot, I'm able to figure it out. But one thing it doesn't do, it kind of limits, is I'm only looking at 1 month of data. So we're going to do this a little differently and see how well it works. We're going to be looking at this way, which would be, we're going to be looking at how are we going to do this? Let's change this over to time frame of 2 years. So here's 3 months on a daily chart, 3 years on a weekly chart, 2 years on a weekly chart, and 3 years on a monthly chart. Overall, we'll be looking at the weekly. But of course, the weekly is made up of days, and the weeks make up the months. I don't know, maybe it'll go fast, maybe it won't, not sure. But right now, and why don't we do this real quick, just to hopefully I save it like this, and hopefully it'll pop up like this again. And before we get too much into this, just a quick reminder, in the description below this video, there's a link to I Have Success website. Look at the downloads there. A little bit below that link is Trading Options for Beginners playlist with beginners in all caps. That has 5 different videos. Between the downloads you can get at the website and that 5 video playlist, you should have a pretty good idea of how to start selling cash secured put options on stocks that you wouldn't mind owning. Feel free to check that out, and let's get on with the show. So right now we're looking at the dollar via UUP, and we see over the last 3 months it's been going down, broke its 200-day moving average. On the weekly, we're looking at 2 years of data here. We see this last week really just fell and broke this this bit of little resistance that it had right in that area. And let's look to the left. We see that it had resistance in this area before. See it touched there, so it right in there, kind of, I guess, in this range, but seemingly has broken this resistance. So where might it fall to? Seems like right in here, a little bit above 27. Seems like it could be really possible. And you can see this like dink, dink. These are all little kind of areas. On the monthly, we see for the last couple months, it's just really moving down. Really moving down, where it was all the way up here at a high of almost 31. Now, something to keep in mind about this dollar is that there's certain type of financial things that are more politically influenced than others, and the dollar is definitely one, right? It's a currency issued by politicians. And if you say, hey, Brett, the central banks, those aren't politicians. Maybe under the textbook definitions, but those central bankers, it's debatable that they run the world. So I think that it's more likely that they are your unelected and my unelected government. So put all those guys in a room and they're just going to affect stuff like the dollar. So that's what we see going on with the dollar, right? It's been moving down. A lot of times when your dollar or whatever fiat reserve, whatever fiat currency that you are transacting in, when the value of that goes down, the things that you tend to be buying, it tends to take more fiat currency units to purchase those things, which would kind of make sense, right? Think of this as a job. If the value of a job is going down, for example, let's say something like being the, people that deal with the trash. That's not really like a prestigious job, and it's probably kind of stinky, and you got to wake up early in the morning. So compared to other jobs, that might not be as valuable. So you might have to pay people more because the value of that job is less, right? Is that an exact great analogy? No, probably not. And but just keep in mind, when you purchase things in fiat currency, if the value of that fiat currency goes down, you might see prices of things going up. So look at the people that control the value of the fiat currency if your prices is going up, and don't listen to their BS excuses. TLT, 20-year treasuries. We see over the last 3 months basically been moving up, but it's been pretty volatile. And over here we got to a high of 109. Over the last 2 years we were up here, right? So sometimes it's just better to look at this, bigger picture, because look what's been going on over the last 2 years. We see the last 3 years it had a rally up here, and just been dropping down kind of ever since. So right now we're coming up testing this. We see a lot of around this 110. Seems like there's a potentially some resistance there, and maybe that's why we had a pivot right here, came down, hit that 100 here, pivot, came back up. So looking at had a pivot here, pivot low, started going higher, pivot high here, right here, pivot low. So based on low, higher low, we're looking positive that way. But here's another pivot right here, and it hasn't broke this pivot low, right? It hasn't got above that pivot low, and that's at that 110. So we want to watch and see what happens at that 110. And what has been happening for, I don't know how long this has been happening for, but it's, where do I want to do this? Add study, here we go. Let's add SPX. Oh boy, that is not playing out the way I want it to play out. There we go. Hopefully this will play out now. Okay. So this purple line is SPX, 500 stocks roughly, representing the full market. And so what's been going on, especially since around the end of last year, beginning of this year, that the stock market has been basically emulating what's been going on with TLT. I get it, it's a little bit out of whack here, but overall you see stock market has dropped down over the last year, and so has TLT. And right here it started rallying up, stock market started rallying up. So let's see what happens. Let's see how that plays out as far as if it starts stalling out around this 110, or if it breaks through this 110, that might give us a little we might be able to use that as an extra indication of potentially what the whole stock market might be doing, going forward. Gold contracts for future contracts, just really ripping to the upside lately. You see that over a 2-year time, you see the moving averages kind of going sideways, a little bit down, right? A little down as far as it was here, up there. So I guess kind of going down, but also looks a little sideways. You can really see it down here. Now you can see it up here and then sort of sideways-ish down. But over 3 years, it really went up. So as we're looking at gold right here, this 1900 point, that was pretty significant that it's above that right now. Let's see if it stays above it. And then we see in the last 2 years, our high is 2078. Last 3 years, 2089. So kind of right in the area, pretty close. So we want to see basically, is it going to stay above 1900, and what's going to happen if it stays above 1900? What's going to happen around 2000? If there's a chance if it breaks above 2000, not just like this, not a breakout point and failure. If it breaks above and stays above, it might be off to the races. But again, this one is also very politically influenced, whether that's believable or not. Woo, doggies, that is not what I wanted to do. There, come on, close for me. There we go. All right, crude oil, WTI crude oil. 3 years, right? We just see that it's really went up. And yes, for the last, basically the last 2021, where's 2022? Oh yeah, we just started 2023. Oh, here's ending 2021. Gotcha. So not for the full last year, but around, when was this? Basically right around this time. So around halfway through the year. Half of the year, half of last year was going up, and half of last year it was going down. But when you look at it in 3 years, right, it's still like, has it really broken an uptrend? I don't know. I would say this is potentially like had this big drop right here. It's kind of this area around 170. It's not really breaking this 170. It came down here and touched it. Here it was more battling this 170. If it keeps kind of going sideways, yeah, maybe maybe it's breaking the uptrend by moving sideways. But we'll see. Maybe it could keep going up, or not. Maybe it'll just kind of keep going sideways. Will it come down? I don't know. I'm not really seeing it. Like, I don't know of anything other than politics that would really push it down. But never underestimate the resolve of the politicians. Bitcoin. What's Bitcoin been doing? Well, over the last 2 years, we see basically it's been down, right? I know there's probably the Bitcoin fanatics that getting all pumped up because Bitcoin's testing that 20,000. You can see it has a lot of resistance right through here. And over the last 3 years, it's been down here. So this 20,000, yeah, it's got a bit of resistance at that 20,000. So let's watch to see how things play out. But 20,000 is a pretty big milestone, and it looks like from looking at these weekly charts, about 20 to 25,000 is a pretty big deal. So don't get too excited. Don't think that Bitcoin is going to 500 trillion in the next 3 weeks just because it breaks 20,000, right? And it's really got probably quite a bit of work to do to get back up here. And even though I might not be able to explain things when it comes to Bitcoin very well, I'm definitely aware of the bulls and the bears talking points. So fundamentally, what as far as price, right? As far as just price of getting it back up here or getting it to, even back up here, but let's say back up in this area. Fundamentally, are things the same? Are things fundamentally the same that pushed it up here? And if you are interested in buying Bitcoin and holding it for the long term, look at where was money flowing that got it up to here. Money was flowing in from somewhere, because there's only one thing that drives prices up, and that's buying. And what are they buying with? They're buying with money. So where was that money flowing from? It had to be flowing from someone or some entity into this asset. And is that still the case? Because when the prices are going down, that shows that money is flowing out, right? So if money flowed in and pushed it up, I guess one thing you could look at is, why did money start flowing out? What was the fundamental change? What was the change in the dynamic? Now the blockchain might still be the same. The quote unquote, potential ability to change the world might still be the same. There's definitely a difference in potential ability though than, doing it. So if you want to speculate on the price or invest, whatever word you want to put in there, which I think the right word would be speculate. If you want to speculate on upward price action of Bitcoin, especially getting back up here, spend some time to figure out what drove prices up right here. Where was the money coming from? What money was coming there? And why was money flowing out? And are the dynamics the same to have money flowing in? And I think when you are checking those, when you're looking into that should start giving you clues as to how high these prices might be able to go. So just to be clear, I'm not saying that Bitcoin can't go higher. I'm not saying that Bitcoin is worthless. I'm not saying that, just listen exactly to the words that I'm saying, and that's all I'm saying. Don't read anything else into this. And to be 100% crystal clear, if I was able to trade Bitcoin in this account or my Tastyworks account, I would trade Bitcoin. Look at, see that drop? I would want to be a part of that. See this right there? See that candle? I'd want to be a part of that. This candle going down, this candle going up, I would be eating this up. It trades 24/7. It's trading right now. Yes, I would 100% be in it. I'm happy that it's in existence. I want it to remain in existence. And someday I hope I live in a state that is free enough and allows me to legally speculate on Bitcoin if I so choose. I mean, for gosh sakes, they'll let people go to Vegas and gamble their money, but state of Hawaii just doesn't feel that a 46-year-old man is responsible enough to make his own financial decisions when it comes to cryptocurrency. But nonetheless, you know, that's the nanny state that I'm choosing to live in, and I'm complaining about it. My apologies. But so just, you know, just to be clear, that I would be actively participating in this. Now, I wouldn't be just hodling. I'd be shorting and going long. I'd be reading the charts and trying to basically day trade it and swing trade it. So so check those things out, and if you feel that maybe some dynamics that have changed, and because that's what I'm thinking, is I think it's possible that wherever all this money was coming from to push prices up this high, I don't know if that's that situation is still there. And so that does, you know, so what that means is, like, you know, like, it just means trade accordingly. That's it. Just trade accordingly. Make money. Use it. I hope you live in a state that gives you enough freedom. The VIX. What's been going on with the VIX? Woo! Look at that. It's all over the place, right? Kind of hard to read. So let's just move on to the next one. Where's the VIX at right now? Okay, in the last 3 years, it's been as low as 14. It's at 18 right now. Pretty low. Right? Last 3 years, 13. So right, kind of right in there. High is ooh, look at how high it got up here. Over there. That's the pandemic crash, isn't it? But anyways, you know, excluding that, this kind of trades inversely to the stock market. So when the VIX is high, the way when I was first introduced to the VIX, I heard this. When the VIX is high, you buy, right? Because when it's up here, that means stock prices are low. So when the VIX is high, you buy. When the VIX is low, you go. And so right now, looking at the last 3 years, we're closer to the low end of the range than the high end of the range, right? Doesn't mean you need to sell, you close your position. It's just more stuff, you know, to keep in mind. You keep this stuff in mind and make the best decision for yourself. And when in doubt, paper trade. Okay, here's where we're gonna get into a little bit better action. SPX. We see overall in the last, this looks a lot like crude oil in a way, right? Just kind of ran up and going down. Ooh, what do we see here? Look at that. Right, not flat. It was kind of, wasn't flat. Not really flat. Definitely see that. It sort of looks like it wanted to be flat, but definitely you see these prices pushing up, right? You see prices right there. Boom. You can, I'm sure you can see that, right? You see that. It's basically like right in that area. Got down here. Boom. Now it's higher up here. So we see prices moving up this way. Over here, though, we see it was kind of like here. I get it. It was way up there. Now it's kind of here. So which way is it going to break? Well, this doesn't guarantee us anything, but look at your 200-day moving average. It's sloping down, right? Which way price is going to break? What do we see here looking at 3 years on the weekly? High, lower high, lower high, lower high. So basically we want to see, when prices keep rallying up, we want to see it test up here. That'll give us a better idea. Does it hit this point and fail and start going down, or is it going to break up with some authority? And then, of course, where's the next spot going to be? Like right through here, because it's not just this. Like, look to the left, right? Oh, you see, prices kind of did it here before, but we passed this part right now. Right now, we're currently over this. See, there's a lot of this might start acting as support. We got to see what's going to happen around that 4,100, and then if it's breaking up through there, here's kind of where's the next spot? Maybe like 42, but definitely as far as this pivot, right? You got to pivot here. So breaking up between 42, and then we got to see what it's going to do here, because last time prices got up here, turned around and came down. And as far as lows, we got what we got? Like we could say low, lower low, lower low, lower low, lower low. So at the moment, you know, is there any strong indication that the bear trend is over? No, no. It's like, I think to me, what I'm seeing is we're learning which direction is it going to trend. It's possible that it could be ending the bear market. It's possible. It's also possible it could be continuing, and we're just having a bear market rally, right? Because not too long ago we were just at these lows right here, and look at it this time, right? Touchdown here, rallied all the way up to here, and then it came down here. So just because it's here right now doesn't mean that it could do that. That could happen again. As I've been saying, I wouldn't doubt if it did. See how it right now, what's it been doing basically? Has it, because look at here, boom, prices over here, right? I wouldn't be surprised if we saw it just kind of bounce sideways in here. So we will see, won't we? Tell you, be nimble, be ready to figure out ways to profit no matter which way it goes. Dow Jones, what's been happening with the Dow Jones? We see over the last 3 years, right? It went up, really dropped down, had this nice pivot right here. Boom, a lot of strength. These stocks are like these big blue chip stocks, and it seemed like money started flowing out of like NASDAQ growth speculative stocks into the stocks that supposedly someday in the future are going to earn money. Oh man, imagine marrying somebody on that premise. I know someday in the future you're going to make money, but you're not right now, so I'm going to marry you and just hope you make money in the future someday. And then eventually, like, you know what? I think I'd rather just marry somebody that's making money right now. Tired of these stories of it's going to be in the future. So that kind of maybe that was part of why money started flowing out of NASDAQ type stocks and into stocks that have been making money for like the last, sometimes up to 100 years. It's like, oh, you've been making money for 100 years? Well, there's a good chance you might make money for at least another 5 years. Oh, you've been losing money for the last 20 years? Oh, there's a good chance you might lose money for the next... No, we're going to start making some profits. How much? Because Johnson & Johnson over here, they're making money hand over fist. McDonald's, they're making money hand over fist. Okay, maybe they're not exactly. Those might not be the best examples, but nonetheless, it seems like investors kind of move over to those blue chip stocks feeling like some security. And... so look at this. You got this bull candle up, sells off, boom. The very next month, we're back into like almost to the top 10% of this candle, right? So in 1 month you're up here, next month, boom, you're down here. Following month, boom, up here. So it, overall, the Dow Jones is stronger than most of the sectors. But what do we see looking to the left on this weekly? Okay, we got this pivot area right here where when it got up to this area before, prices sold off down to here. Keep in mind though, right? Prices got up here a little lower than this, and look how far they sold off. This time they only sold off here. So you really have this low, and you got a higher low. Obviously you got high, lower high. You still got a lower high like that, lower high, whatever. And yeah, so we will have to just keep kind of watching, which is more evidence of trade nimble, trade in ways that you're going to profit regardless of which way the stock market goes. Now looking at the NASDAQ, you see money had just been flowing out of it, right? Money went in and just started really flowing out. And look at this. You got this big bull candle here, drop down, not as much strength in here. You see, whereas the And the Dow Jones, we're back up here. This one, it's not even, technically it's not even making it to the body. It's in the trading range, but it doesn't even get back into the, still below the open of this month. And I don't see anything, you know, potentially, I guess we could see the making of something going sideways, but it's sort of, I don't see any really kind of objective thing to say, like, you know, it's kind of subjective. Hey, is this, seems like it still could definitely be stay in bear territory, and that's 100% what I'm quickly noticing here. Which we'll have to, let me look at it a little more and see if I see anything. But right, you got the low, lower low, lower low, lower low, lower low. Okay, you got a pivot here, but it's like, is that really that impressive? It's kind of like, it's still sort of in this, in that area, right? Is that making a bottom? Is that bottoming? Maybe, right? To see, we need it to get back up here. Now, if it's not going to get back up here, we got our answer. If it starts turning back down, but if it gets up here, we got to see what's going to happen through this around. Really gotta like around where this 200-day moving average is at the moment, and Russell 2000. Now that one, you could probably see some sideways action going on, right? I get it. There's this big one here, but it's ooh, look at this. Look at this. Now, right, it's kind of in this range, but boom, that is definitely right. This is sort of more in the range. I could, to me, I'm like, okay, I can see this being kind of rangish right there. But not that. That's definitely, look at that. Remember gold? Remember, if it keeps narrowing, if it's staying flat here and it keeps narrowing, we might see some boom to the upside. Might, right? But silver the other day was doing that, or not the other day, the last couple of weeks, and then boom, silver kind of took a plunge that way a little bit. But it seems like I think silver. Did we look at silver? I don't know. No, we didn't. So be nimble, right? Be nimble. What else could we look at? Let's take a look at these 12 stock sectors. We'll look at the technology. All right. So unsurprisingly, you see technology, you know, seems to be continuing this kind of like bear trend in this bear channel up to the top of it. And once after this month, maybe, but you know what? Then, you know, we got earnings starting and all this stuff, and you know, especially since I've been making these videos, I'm just so thankful that I am like I'm kind of like a non-directional trader. Yes, you know, if you go long right here and you get a piece of this, you don't have to like open here and close right here, but you know, if you get like 70% of this move, you make good money. You get 70% of this move, you make good money. You know, see what I mean? Like, so this is my point, is you, as we're figuring out what's going on, see, it didn't come all the way back down here, and this time though, right? These ones, well, so let's see what's going to happen. If it starts falling back down again, and we see that it's going to stay in this trend, you know, then possibly you can look at your favorite technology stock and see if it's been downward trending. Try to figure out what channel it's in, and you know, do something when it goes, when you see it at the top part of this channel, like this, like if we realize, hey, this is going down, then do some sort of position where you are profiting from the stock moving down. And then where would you close it? You'd probably close it somewhere when it gets lower in here, and depending on the equity and a variety of factors, and then maybe you could go long, you know, do something like that. It's one of the powers of reading stock charts. If you don't want to mess around with any of that stuff, then, you know, find Go through those stuff I talked about in the beginning. Sell cash secured put options on stocks that you wouldn't mind owning. Sell them at strike prices that you're okay with. Right, if you're okay with buying it. And keep in mind, like, something that happens in the stock market is people get so fixated on what price they purchased at. And like, if it goes down a little bit, they're like, oh, I'm losing money. Like, no, you're not. You're not necessarily losing money. Like, were you planning on selling it? If you buy, like, for me, there's some stocks that I'm buying that pay dividends, and I'm slowly accumulating a dividend portfolio. And one reason why is not because in the next 12 months I'm trying to retire off of it. I'm 46. I'm thinking about when I'm 80 years old. If I'm still alive when I'm 80, what is my cognitive functioning going to be? And if I have amassed a portfolio of dividend producing stocks, then it's like I'm going to get a paycheck from every stock. I'm going to get a paycheck probably about every 3 months. Whether I'm smart enough to short, whether I'm smart enough to read, the stock charts anymore, whether I can, do option trading strategies or whatever. Like, if I can't do that stuff anymore, at least I got these dividends coming in. And, it's a little bit more risky than an annuity, but it pays a little more than an annuity. And so, so my point is, right, for me doing that, I don't give a rip if I buy it at, like, if I bought it at 72 and then, I bought it at 72 on this up day and then it drops down here to 66. I don't care. I'll just buy more at 66. Right? You want to put things in perspective. Like, there's so many different ways that you can profit from the stock market, and you just want to keep things clear, right? Don't blend everything together. If you just see everything as like, this is the price, you're not understanding enough. There's more to understand. And if you don't really want to understand that much, take more of a lean towards thinking about business ownership. Are you buying a profitable business? Can this business sustain itself past your death? That's the kind of thing you might want to buy if you want to kind of keep things simple, and it's like, too much of like, hey, I don't get it. Like, I'm going to trade this one, I'm going to invest in this one. If you're just going to choose one or the other, but I don't know, if you want to trade, whatever, You do you. I was just complaining the other day, like, some people telling me I don't need as much sleep as I need. Like, hey, it's not for you to tell me how much sleep I need. And it's just like, for me, it's not for me to tell you should trade or invest. Like, you pick the right one for you. But if you want to keep things simple, consider looking at selling cash secured put options on companies that have some good, solid fundamentals to them that you think can be around past the time that you're going to be alive. Anyways, so consumer staples. These are ones that might be worth looking at when you're looking at companies that are just like boring companies. Andy Tanner talks a lot about Hanes underwear, because Hanes underwear, no matter what's going on in the economy, there's probably going to be people that buy some underwear. And you know what? Hanes underwear is probably not going to have the same problem that Blockbuster Video did, obsolescence risk. So, think about those type of things. It's just good old underwear. And we see that not only, speaking of underwear, it was under the 200-day moving average, and now it's over the 200-day moving average. But what do we see? Boom, just basically kind of gone sideways here, but it went over here. So what do we see here, though? Look at 3 months, 3 years on the monthly. Well, I don't know. I see an uptrend. That's what I'm seeing. And it pulled back right here. So here's our pivot. There's nothing to indicate that the uptrend is necessarily over. Looking at that, potentially could be moving sideways. I'm going to go through these faster. Real estate. What do we see with real estate? Now, real estate, okay. I don't see. I could see a debate for the uptrend being over there. Oh, so we're basically we're basically where we were 3 years ago. So went up quite a bit, but back down, kind of back down to this level. And this is a bullish sign, though. Look at that, red bar ignored. boom, drop down here, boom, price is back up here. So that's good. You know, I know there's people that have been trading and investing way longer than me, and some of these people that I learned from, I consider my mentors, coaches, stuff like that. They don't know me personally or whatever, but I pay to listen to what they have to say, and at least two of them, they're not thinking that that this bear market is over. So here, utilities, utilities just kind of has been going up. Had some woo, look at that, man, that's amazing. Kind of like this pivot area right here, but seems to be going up, right? Pivoted down here, that's probably right there. And overall seems to be going up with this big, really volatile range right through here, but kind of in the middle, went sideways. This was a nice kind of smooth, you see, it just went up, pivoted here, came down, but look at that, boom, low, higher low, a little bit higher low, pivot, this high, higher high is definitely higher, right? High, higher high, higher high, and higher high, higher low, then hits in here, right? See right in here, acting as some resistance. You can see it right in there. Boom, busted out through it, but came back to this area, just a tad bit higher, but still in the area. So then it started getting even more volatile, but we're kind of, see, right in this area, right in there. So we'll have to wait and see what's going to happen with utilities. Healthcare was strong for a while, and yeah, look at that. Maybe there's a chance it still could break out through this stuff. You see, you can probably see this, something like that. Maybe I'm reaching for straws here. Been going a little bit down right here. That's a lot of stuff. So we gotta see right through this area what will happen. Consumer discretionary. You can probably see that. Not looking at too sideways or anything. Now when you look here, right? You know, it's kind of clumping up, but wow, really smooth decline down. Good. I thought, we did that communications already? I guess I don't know. I don't know if we did or not. Whatever. We're just gonna do whatever this is. And what we got here? Retail. Retail really. Look at that. That's been sideways. So yeah, I think it's definitely. I think we got some possibility of going sideways to down. But if the powers that be do some sort of quantitative easing or some sort of program, and boom, they put this into effect, then it could go up. But unless they do something like that, I don't see it going up. I don't necessarily think it means it has to go down though, because there are, I think there's that in between. I think without any sort of government, quasi-government intervention, I think it would go all the way down. But the reality is we don't live in that world. We live in a world where the government does intervene. If you don't think so, then take a peek at the plunge protection team. Learn about what happened in 1988. Signed into what is that? Executive order, law, I don't know. Put on the books, was established. Whatever way you want to say it. But President Ronald Reagan created this. Working Group on the Financial Markets, aka Plunge Protection Team. So when you have things like that, Plunge Protection Team, and you know, it maybe they can help keep it from crashing, but maybe without some sort of bigger program, they might not be able to, you know, juice it up like this. So if that were the case, then I could see potentially just like the sideways moving, which is kind of what's been going on from my standpoint. That's what I'm seeing. I'm seeing that it's basically kind of hit this range. Now we could move, if we move this like up here, right? If we start adjusting that trend line, then you know, I don't know. I guess that's why, like, if you watch Master Trader, they don't like the trend lines because it's subjective, and it is. It's like, oh, I can move it over here. I personally don't have a narrative, right? I don't have an opinion, and I'm not like looking to validate my opinion. I'm not trying to be right in what I tell you. I'm trying to be right as far as what determines if I'm right or not is that do I keep making money? So my brokerage account growing shows me if I'm right or not. Like, well, if I say something and it doesn't come to pass, but I end up like making money, like that's all I care about. And for the bulk of it, but yeah, that's, you know, like what it looks like to me is, yeah, looks like we're gonna have a sideways type of thing going on from kind of you know, up here, kind of in this area, down to here, and then in these tighter ranges. So until we see it really going past, like I was showing you that whatever 4,100, 4,200, somewhere in there, you know, until we see it really going past that, you know, looking on this line chart, we got to really see it. We got to get it. It's got to get past here. It's not past this yet. We see right here, right? It got up to there, went down. Got up to there again, tested it, went down, but didn't go down as far. Look at that. So we might be kind of tightening up the range. Let's see what happens. In the meantime, you know, paper trade. When in doubt, paper trade. Keep learning. That's going to be one of the most important things. Is just to keep learning, keep learning, keep learning. Paper trade. Try stuff. Have some paper trades that you're extremely risky, and have some other paper trades where you're looking at how much money do I have in my real trading account. You know, for example, if you got about $10,000 in your real trading account, then you know, maybe in your paper trading account, maybe your paper trading account has, let's say, 100K. Well, out of that 100K, have about, kind of think about having 10,000 worth that you're trading. You got 90,000 to just whatever, be risky with and reckless if you want to do that, and have 10,000 like pretend you're trading with real money. So practice trades that you just putting on to learn, even if you have no clue what you're doing. That's where you start figuring out, getting clues by making mistakes, and then maybe have you know, a certain amount of trades that you're not just doing recklessly. You're like, okay, this is going to be one of the first trades that I do, and that's why I recommend selling cash secured put options on stocks that you wouldn't mind owning. A lot of times I talk about H&R Block, and because H&R Block, it's just like this boring company. People don't really think about it too much. And you know, are taxes going away? No, they're not going away. They're not going away. They're going to be around a while. It's a profitable company, so it's not going to have obsolescence risk. This is 5-day chart of it. Now, keep in mind, I'm not saying you should invest in this. This is not a stock recommendation. The stock is not suitable for you. I'm saying to think about what are the aspects of H&R Block that make it kind of like underwear, right? That's, you know, just for an example, right? It's a real thing, but it doesn't mean go out and do it, because look where it's at. So it's got this 200-day moving average. It's just really kind of been moving up, and we're in this, hitting this kind of resistance area right in here. Here's the low that it's been at, and then figure out how to do a little bit of fundamental analysis, which you can by watching the 5th video in that playlist that is in the description of this video, with like stock or trading options for beginners in all caps. This is a weekly chart of it. You know, down here, look at that. You can probably quickly see, boom, this would be a good, seems like that's a good price to buy it at, 25. We're a ways off that. Now, more than likely, if you wanted to sell a cash secured put option at 25, now keep in mind, right, you got to buy 100 shares. When you're dealing with stock options, you're dealing in increments of 100 shares. But look at this, in the next 6 days, right, this contract expires in 6 days. Bam, you can't even get filled at that. You can't even sell that. Let's see, 34 days, 25. There's not even a strike price at 25. Huh? Look at that, no strike. You'd have to go up somewhere. But if you're unwilling to compromise, then you can look at 62 days. Look at that. Right now, I can't even get filled. You could potentially, you could try though. You could, there's not even a mid. You can put something in there. You can try, right? Doesn't hurt to try. It might not get filled, but doesn't hurt to try. So maybe you got to go out even further. Do you really want to do that? No, there's a variety of things to look at. But if you don't know, if you have no clue of what you're looking at, then start learning, start getting a clue. Watch that stuff, paper trade stuff, you know, something like H&R Block. It's not going to go away. Look at Yahoo Finance. Let's just look at that real quick. Yahoo Finance. Put H&R Block in there. End this on a H&R Block note. H&R Block. All right, you're looking at the current trading price of a little bit under 38 bucks. You're getting, for dividend yield, you're getting a little bit over 3%, but this is probably not going to change too much. It's paying you a little bit over $1 a year. You know, one thing that you could potentially do is like, you know, if you have, let's say you have an annual bill, like in Hawaii, we have car registration. I just repaid my car registration in December, last December. So it was about 350 bucks, something like that. Well, I would need, you know, a little over 350 shares of H&R Block, paying me a little bit over $1 a year to, if I accumulated that, now, then, yes, the way that it works out, by next December, if I only had, you know, 300, let's say 370 shares, would I have enough money to pay my car registration just off the dividends? Maybe not, because it's due in December and maybe some of these dividends are being paid in December. But the following year after that, right? Long term, if you're not a long term thinker, like then I feel for you. But doesn't mean you need to be a long term thinker. But when you're trying to put together figure out what your monthly bills are and pay them via dividends, or help pay via dividends. So anyways, you can look at that. Also, we see for whatever Yahoo is doing this with, look at, it says undervalued. We see its trading range, low is 21 at 52 weeks, high is around 50. Is now the best time to buy it? Maybe not, but maybe put it on your radar. You can look at something like this. What's the enterprise value to EBITDA? Under 10. Andy Tanner likes it under 10. PEG ratio. Look at that. That PEG ratio is price to earnings of growth. This is earnings before interest, tax, depreciation, amortization. So it's kind of like value of the company to straight earnings before any accounting finagling goes on. And you can look at held by insiders. Not much held by insiders, right? Held by institutions. Boom, lots held by institutions. Is that dividend going to be good for a while? How much money? 36% of their, I guess, income going to paying the dividend. That seems pretty good. It means that they could probably raise it if they wanted to. Let's look at take a quick look at their free cash flow. Look at this. They're profitable. Free cash flow after their bills are paid and they got money left over. Oh, they didn't rate. Oh, wait, no, that was it. Okay, so they didn't. Oh, that was I'm looking at the wrong thing. So, anyways, you know, check that stuff out. Go through those videos that I talked about in that playlist, and download that stuff at at ihavesuccess.com. Get yourself a paper trading account. Start learning this stuff. You can do it. This is definitely within your wheelhouse. You might have to learn, but gosh, I mean, what's wrong with learning? There's a quote. I don't know who said it, and I don't really know. I'm paraphrasing it here, but it's like the learners will inherit the world, while the learned find themselves perfectly suitable for like a society that no longer exists, or something like that. Don't be someone that thinks I know. Be someone that is going to continuously learn. With that, I hope you guys have a fantastic day, whatever day, time it is you're watching this. Aloha.